Hey everybody, I thought I'd do a quick video here. I was lucky enough to be featured on a podcast called CPI. It's Canadian Passive Investing. The host is August and Ava. Awesome team. Somewhat topical because we're talking about the Canadian real estate market. I'm here in Toronto. I think originally they are from out west, Western Canada. And we were talking about some of the expensive markets and just capital raising in general. So I'll play that quick video. If you have any questions, just shout out to me. But on the Toronto front, I've gotten a lot of questions on my podcast recently about expensive markets. So whether that's LA, San Francisco, Toronto, etc. What is with these cities? Should we be investing in these cities? Is it okay to invest in these cities where there is not much cash flow, if any at all, but banking on equity appreciation? And I think it's a misunderstanding of what investors are doing in these markets and the type of investors that are in these markets. So for instance, in Toronto, we have especially in the downtown core, we have a lot of pension funds, real estate investment trusts, institutional capital that has a long-term horizon when it comes to investing and are, like I said, very well capitalized, being institutional. And those type of investors can afford to potentially put down more equity on these properties where, yes, your return on equity is lower, but you are cash flowing on some of these very low yield buildings. I'm talking sub 3% cap rates in some situations. So I don't think that the downtown cores of these expensive markets are completely off limits to investors. I think it's more about strategically planning and the type of investing that you're doing. So for instance, value add investing, starting to see a resurgence in our markets. But that being said, I always recommend to individuals to look in these tertiary markets. I like the term 18-hour cities, these really good, fundamentally strong cities and towns that are just outside some of these major downtown cores or major cities, whether that's in Canada or in the US. Anyways, that's my 2 cents on that. So without further ado, here is the interview with Ava and August.
Now, maybe we can discuss your nurturing process for your investors, as it's obviously a very important component of syndicated investments. So maybe you can please tell us how you nurture your investors and get that know, like, and trust, and keep that know, like, and trust going.
Yeah, for sure. I can't remember. It was actually a guy in the West End, I think Saskatoon, I had on my podcast, and he said, it's very simple. He's like, listen, go on your phone. If you scroll all the way down, if you have an iPhone and your contacts, scroll all the way down to the bottom, you'll see how many contacts you have. It's actually crazy when you're like, how did I accumulate, whatever, 1,000, 700, whatever contacts. You can upload those to your computer as a spreadsheet, and you could run through those and really look at who is somebody that I haven't had in contact with that I could reach out to, not to sell them anything, but as a touch point saying, listen, how are you doing? It's been a while. Just a general email. So he had like a 3-step, general email discussion, and just not being salesy, and eventually basically telling people, listen, like, what I do in real estate. These are the type of investments that I buy. If this is something that you'd be interested at all, when we have one of these under contract or we're purchasing one, let me know if you'd want me to share it. And if you don't, just let me know as well. And 9 times out of 10, people don't say no. They don't say like, no, don't tell me. And you be somewhat strategic about the people that you're reaching out to. And then I think what people really need to do, you're in so many more networks than you think you are. For me, I did my master's at the University of Toronto, and just reaching out, literally getting the class list for my year and reaching out to all of them, because if they did that in school, they're probably doing something that might be a little bit different. They've made a career change maybe later in life, so you have access. I had access to a lot of people that were like, yeah, 100%, sign me up. And some of the people that are in the subscription that are LPs were from that. So I've had people on my podcast that were in law enforcement, and they left the force, and then they had their first syndication with 20 cops. So I think you got to look at the networks that you're in, and don't be afraid to tell people what you're doing. Like you two are doing here. People know when they talk to you, August and Ava, like, yeah, they're in real estate. So I think being seen is important. And I know it's not easy for everybody. We're not all extroverts, but it really is an important part if you want to attract capital, and that's the path you want to take.
Great.
Fantastic.
Awesome. And I'm sure your shows and your connection to bigger pockets is also a great cultivation process for bringing awareness to you and investors to your services. But maybe briefly touch on your nurturing process when investors do connect with you, if it's from your own list or from your marketing campaigns or from your thought leadership platform. As they come into your database, how do you keep in touch with them? If it's through newsletters or other content that you send to them. So eventually when you do have a deal, because as us being in the syndication business, we're not a fund, we're not continuously buying assets and continuously raising capital. We look for great deals and then we present it to our investors. So talk to us very briefly about your nurturing process for your leads or your contacts.
Yeah, absolutely. I think for me, part of it is, when you go to workingcapitalpodcast.com and people will subscribe to the podcast, that'll be part of, me reaching out to people and connecting and nurturing through there. When it comes to people that I've reached out to that say didn't sign up for the last syndication, just touch points with them, whether, Constant Contact or MailChimp, keeping them abreast of what you're doing. And really, I haven't formalized it in to a T. For me, it's just been, the list of people that I have that are in my database on, through my website, where we capture all the emails through the list that I have when I reach out to people. It's really like that right now. If we move to something more formalized as we continue, maybe that will be the path. Ideally, I'd like to get to a point where we're going to have committed capital rather than syndication, where you're chasing the deal, chasing the clock. Whereas where you can call capital and you have the fund there.
Yes.
And it's cool because you probably have a long list of people who are watching you on the sideline, watching you kind of do your first deal and then your next one. And eventually a lot of syndicators say 5 years down the road, they've been watching us and boom, they just gave me $2 million. So
yeah. Well, I had a buddy of mine, and really good buddy that I did that, was in my MBA, and he's like, he opted out of the deal, and he was just, you get a guy constantly asking you questions, and then he's like, so did that happen? I'm like, yeah, it happened. He's like, okay, I'll go on the next one. I'm like, I told you, man. So yeah, you just keep in touch, and yeah.
Yeah, and it seems your process is much more up close and personal and hands-on.
Yeah.
So that's always the best way to go about. When companies get bigger, you never even get the CEO on a call. With your case is very kind of up close and personal. So that's great. That's great.